Today happens to be the last non-farm payroll for the year 2024, and this should be rather interesting. I'm going to give you a quick look into EURUSD and how things developed further based on the DXY, the USD index. Well, as usual, first of all, it's always key for us to pay attention to the high impact news. And if you look very well, we have the non-farm payroll unemployment rate coming out later today. And that should be approximately at about 7.5 hours from now, right? So there's still enough time for you to jump into the market if possible. I wouldn't advise trying to get an entry way too close to the news period because of the usual whipsaws, the usual slippage, spread increments, and the likes, right? So this is EURUSD here first of all, and if you guys remember from our videos from this week, we've been talking about this area that has been protected heavily, and we're actually looking for it to be a sell and then to drop further down. But then we saw this area of demand that they kept on respecting over here. Don't forget, you can always look to the left, right? Look to the left for clues. So looking to the left, you'll be able to see the flip zone where it acted as support, resistance, a whole bunch of support, resistance here as well. So we know that based on Monday's move, this was Monday's move, first of all, we talked about this, and then we had it in a sort of range in this manner. Based on support and resistance, supply and demand, they are pretty much similar, but there's still a fine line between the two of them. Noticing this demand, we decided to give it a go, right? After we pulled the trigger here on a sell, right? Based on obviously the flip zone area. So we have two positions, one for sell, one for buy. And the good thing now is that as we have two positions in, we tightened up our stop loss and then of course got knocked out from the sell, right? For more or less break even. And then the buy happened to be good to go. So for the buy, excuse me, for the buy, we happen to get two positions in, and this is just a screenshot over here from the two positions that we got. Don't forget, we just mentioned this area over here. We just mentioned this area here that we said we saw acting as demand, and then looking to the left-hand side. And this is the area where we sold as well. You can see the reaction, right? Always good for you to keep your charts pretty simple, pretty easy on the eyes. Don't put too much indicators, don't put too much lines and so on. If you showing like you're trying to trap price basically, if you showing where price is coming from and probably where price is going to are always very key. And that's what we're able to do and get two positions here. And now price is here has gotten to these highs over here from our screenshot. So if you cross over back to the charts, you see what price is doing reacting to that area. And then this is the area here that we're talking about. I'm just going to drag this further up. This is the area here, which obviously is showing that resistance, resistance, resistance. And of course, you can see we're having a bunch of resistance over here. But then don't forget, based on the high impact news, the non-farm payroll coming out in about 7.5 approximate hours from now, we would definitely have some volatility in the market where it could easily break out of this and push higher, or it could move violently to the downside. And of course, when you have good positions, it's always good for you to protect them like we did by moving our stop loss to break even plus, right? But then we can still be affected by slippage just in case price moves fast enough and then goes past our stop loss. It's very possible for us to be in loss, which is something that is normal during high impact news periods. But whatever the case might be, break to the upside, which is a good one for us, or to the downside based on the non-farm payroll coming up, just ensure that you protect your account accordingly. You manage your account, manage your trades properly, stop loss placement. You could use partial close, you could use trailing stop, but well, don't trail too close because of whipsaws that could happen in the market. You don't want to get knocked out and then the price goes in your favor, either up or down, right? So, of course, all of this is still based on the DXY, and that's why we always ensure that we take pay attention to the DXY and find out what is up with the DXY. And just like we did for the EURUSD, this is what we have on the DXY as well. This area here, as you can see, as support. So it's going to break to the downside. It's going to push back to this area where it broke that was respected earlier. Only time will tell, right? So one thing I want to tell everybody is ensure to protect your account accordingly. Your money in your own account is better than your money in somebody else's account. Okay, so with that said, thank you guys. If you have any questions, you have any instrument that you want us to take a look at, let us know. A lot of people have been talking about Bitcoin now hitting 100K. We did a few videos a few days ago about Bitcoin and 100K projection. So what's next as Bitcoin has hit 100K? We'll also look at that much later. So we want to say thank you guys, enjoy the rest of the day, and goodbye for now. Cheers.